Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
We are excited to announce a partnership between Google DeepMind and the Indian government.
Nasdaq about 0.75%, the Russell 2000 about 1/3% up.
Every company has to figure out, has to ask fundamental questions.
The good companies will participate, take a forward-leaning approach.
This sector is going to grow manifold in the coming years.
IT index is up about 1.5%. AI Summit, for example, which is happening, right? It's essentially focused around how do you get all the layers of AI.
High voltage cables are used for bringing heavy power to these data centers.
Industry leaders, innovators, entrepreneurs.
On that note, though, we'll wrap up on this edition of Chartbusters.
We will prove that AI does not take away jobs. Rather, it will create new high-skill work opportunities.
All our companies will leverage AI to be able to build a moat for their businesses.
India is just building incredible AI, the entire AI stack, from like data centers to models to applications, and I think there's no country in the world quite matches India for total AI energy.
They have a network in India, they have distribution, they know the Indian market, they have expertise that's complementary to us.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Rima. It's a Thursday afternoon and the bears are feeling on top. Geopolitical tensions, I think, are weighing on market sentiment. The Nifty is lower. The problem today is the Nifty bank that was otherwise, batting for the bulls. That's given up a good amount of ground, more than 500 points lower, and that's why the Nifty is down. And also, but actually, Rima, the advance decline ratio, not too bad. Two stocks declining for one stock that's advancing. That's a bit of a turn in comparison to what we have seen of late. I think the 20 DMA is the important mark. On a closing basis, you do not want that to breach. Few factors playing out: geopolitical tensions, domestic participation relatively lower because there's a holiday for banks. And I also think that maybe, in fact, a couple of factors got extended, like the PCR went to around 1.25 earlier today, which is cooled off to 0.8.
So at the day's low now, and markets seeing profit booking after 3 days of gains. The Nifty's breached 25,550. It's over a percentage point fall. On the way up, the only index with a little bit of green is the Nifty Pharmaceutical Index, and that too is up only close to about 0.1%. The Nifty IT Index, which started strong, has now given out 1.8% from the high point of the day, and the Nifty IT Index has dipped into the red, and the fall there is about 0.25%. Realty continues to get hit hard, 2% down on that. FMCG Index lower by 1.5%, and as Nigel pointed out, banks are weak in trade. If you look at the top losers, you can see the pressure of crude prices. Brent crude, when we started the show, was at $70.50 per barrel, and now it's risen to $71.4 per barrel. So there has been an increase in crude prices through the course of the day, and that is putting pressure, say, on a company like Interglobe Aviation, Asian Paints, and then you've got other losers like Trent, Ultratech Cement, M&M. But we've got 1 hour to go. Lots can happen. Today is also the weekly expiry. So let's quickly run you through what we've lined up for you on the show. Weakness intensifies on Dalal Street. The risk of sentiment with broad-based selling across sectors. The Nifty sinks below 25,600, closer to 25,550. Sensex plunges nearly 900 points. Defensives like pharma, healthcare offer limited support. Amplified reaction on crude sensitives today after oil prices stage a 4% uptick overnight on fears of escalation between US-Iran tension. Oil marketing companies HPCL, BPCL down. Upstream plays ONGC, Oil India are upbeat in an otherwise weak market. CLSA downgrades Dixon Tech to a hold from an outperform, slashing the target price to 12,100 rupees versus 15,800 earlier. Stock corrects. We'll bring you the rationale behind the downgrade. But for now, let's find out a few technical trading ideas. How do you position yourself in the last hour of trade? Mitesh is now joining in. Mitesh, if you had long positions that were built over the last few days, I guess they get stopped out. What now?
So, in fact, today morning also I was looking at continuation beyond 25,750, 780 zones. And the trading stop loss was around 25,700. That got stopped out. So yes, I think the longs have been taken out to that extent. Very clearly, I think, the market is not sustaining at high levels, and therefore, the direction of the markets must be respected. On the stock side, I have one buy and one sell. HUL is a sell with a stop at about 23.10 for targets of around 22.40. And HDFC Life, somehow that stock is still holding out very well. The chart setup is pretty positive over there. There's a buy with a stop at about 722 for targets of 755.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's talk about crude oil prices. That spiked by close to around 4% overnight on the rising US-Iran tensions. Manisha Gupta joins in to help us put that into perspective. Manisha?
Well, thank you for that. Yes, crude oil definitely in focus with 4% of gains in the overnight market. And with that, we are trading at around $70 a barrel for the Brent prices there. It's not just crude. If you look at the heating oil prices, they gained up by 5% overnight as well. This is as US and Iran are yet to reach a potential nuclear deal. And there are now fears of military intervention by US in Iran. There also have been reports that Iran is temporarily shutting parts of Strait of Hormuz. This was done for a few hours. Whether it has been opened or not is something that the reports have not clarified yet, but this is a concern. Iran clearly showing a show of strength there. And then you have Iran and Russia, which have conducted various army drills therein at the Sea of Oman and also Northern Indian Ocean. That is going to happen today in the evening. Another thing that the markets will keep an eye on. And then apart from that, you have Ukraine-Russia talks in Geneva, which have ended without any breakthrough. So both the big conversations that the markets were keeping an eye on haven't yielded any results at all. Interestingly, there is a report from Eurasia Group which says that with the whole data and conversations and statements coming in from Iran and US as well, there is now a 65% probability of a US military strike on Iran by the end of April itself. So that's what the street is watching out for. The other thing is the support for crude also is coming in from the fact that you have seen the US inventories decline, the US data in sense of industrial production, home sales has come in on the positive side, and with India also cutting out on Russian imports, India is also in market to buy at market levels, supporting prices yet again. This is what we've done in sense of prices in the year 2026. We are up by 14%. This is after 3 years of constant decline that crude prices have put out. This year it started strong, one, as the data gets better, and two, as the geopolitics comes on surface yet again. Markets are also looking at a big ranges already trading in the international markets there. So when you look at 2025, Brent made a range of around 82 on the higher side to 58 on the lower side, which is a $24 of a range. For this year, we've already traded from 60 to 70 right now. So a $10 of a range has been done in less than 2 months. So volatility in crude oil prices and some geopolitical premium really seems to be driving it.
All right, Manisha, thanks a lot for that. We have Deven Choksi, Managing Director at DR Choksi FinServ, who joins us on the show. Hi, Deven. Good afternoon. Not too good for the bulls today, but that's the market for you. Crude oil prices have spiked up. The geopolitical fears gradually getting priced in. Given that you've seen a surge in crude oil prices, how would you approach this? ONGC and Oil India, they have valuation support. There's a dividend yield out there, and that's a direct play on crude oil prices. Your view on both these two names, and on the flip side, some of these other names are getting hit. Even Interglobe Aviation is getting knocked back in today's trading session. Is it providing a buying opportunity? Please go ahead.
Yeah, Nigel, good afternoon. Well, I think not very surprising with the fall in the market today today with the news that I think the tension is escalating out there on Iran, and probably because of that, the resultant impact would be on the crude oil prices. In fact, the technical analysis also suggests that I think the crude oil prices could move up to $75 to a barrel, which is probably, I think, hurting the entire sentiment in the market on one side. At the same time, those traders who want to take the money off the table probably, I think, have resorted to taking the position out, and probably that's the reason for which we are seeing a sharp fall in the market across all the sectors. Yes, I think the derivatives of crude oil, be it in the area of refining or the petrochemicals, all of these areas are going to have some amount of challenges because the price volatility will hurt them. And that is the reason for which I think the likes of Interglobe Aviation are having the impact onto the stock price today. Honestly, can't take a call based on, I think, such moves on a day-to-day basis, because on a day-to-day basis, I think the basket does change, of course, but crude oil basket does change. But I think the industry is not immediately, I think, getting impacted with all of that. So would probably allow the event to pass by and then take a final call. But at this point of time, definitely, I think one will keep it more away from the market, especially when the valuations are not justified, because that's an area which will come under attack in a given situation of nervousness in the global environment.
Let's talk about Dixon Technology. Earlier today, even Morgan Stanley, when they came out with their overweight, underweight calls, Dixon Tech was a key underweight for Morgan Stanley in their portfolio. But today, we also have a bearish call coming in from CLSA on Dixon Tech. There is a downgrade, and Vinny is now joining in to tell us the rationale behind this. Vinny?
Hi, yes, so there's a downgrade that's coming on Dixon Tech, and this is coming from CLSA. So they have now downgraded the stock and given a target price from outperform to hold, and a target price is lowered, and the new target price is 12,100 versus the previous target price of 15,880 rupees. Last 6 months also the stock has seen a sharper fall versus previously. So there is a fall that's already come in Dixon Tech. Now, what is the reason CLSA is saying that they believe that the memory industry that's entering a super cycle, mainly driven by AI's appetite for high bandwidth memory and DDR5s. Now, this is mainstream storage that is going to face some tightening in terms of supply and rising costs. Now, dependence of India is much higher in terms of import levels, and that could cause a bit of a squeeze that could come in as a concern for some of these players, that is the EMS players. Also, what they are highlighting is in terms of the risk that comes in to low-end smartphone volumes, as well as concerns around midterm growth visibility as well. And that is the main reason that they are highlighting that once, because of these the boom that you are seeing in the memory industry, this could be a bit of a vulnerable time that could come in for EMS players and Dixon Tech. That's why they are downgrading the stock to a hold.
And stock is down 40% from its 52-week highs. Devin, is it still expensive after the recent correction? At what point will you start looking at Dixon Tech as an attractive opportunity?
I think looking at the last quarter results also, maybe if you minus the other income part, probably the growth in the profit, I think, is not justifying the valuation that the company has been trading at. Undoubtedly, I think they are probably playing a big role in providing the products, I think, to their OEMs. But at the same time, I believe that the higher valuations are not helping this company, and that is the fear which we always carry, that in any given situation when the negative news flow comes in, at that point of time, I think the valuation will not hold. If the memory-related threat is there, it is not applicable alone to Dixon. It could be, I think, applicable to all the OEMs to whom they are supplying their products to. And they are basically going to have the squeeze in the margin because of the prices will go up due to the higher price trajectory for the memory chips. In my viewpoint, safer to stay out because of, I think, the valuations. If the valuations become attractive enough, certainly one can. But at this point of time, it is more of a trading play. It might have a small bounce because of the fall that it has experienced. But I would probably, for long investment, I would not probably venture immediately into the buying of the stock.
Okay, all right. Devin, I wanted your view on UPL. The stock actually has been holding quite strong. In this sort of a market, the stock is up close to 18%, I think, the last 1 year or so. It's been a bit of an underperform if you look at it over a longer trajectory. But today, the stock is up close to 2.5%. It has valuation comfort. That's always been the case. And now they're talking about unlocking some value as well. Your view on it at around 765?
Fortunately, Nigel, I think UPL rallies kind of companies are now today having a tailwind in form of stable input cost prices, I think, which they were not up till last year, I believe. Though I think they accept the situation of spike in the crude oil prices immediately, but otherwise I think they are basically saved on that aspect of relatively stable input prices. And if the input prices remain stable, probably I think they have the better possibility for higher amount of profit margin along with. Of course, as you mentioned, Advanta's demerger is basically also resulting into removing some part of the cloud in the balance sheet that the company was having up till now. So to that extent, I think this is a positive news. But whether it is enough for the rally to continue, not completely sure. They have relatively better price profit performance coming up in the coming year. That much is understood. But whether it will probably drive the stock price all the way up, not too sure at this point of time.
Real estate has rebounded from the lows that it hit towards the end of January. So the real estate index is off the lows, but it's still, down quite a bit, 20% off from the highs. And so many individual stocks like Godrej Properties. We're talking about Godrej Properties because it's one of the top bets of Jefferies when they come out with their list for 2026, saying that earnings improvement expected in Godrej Properties. But real estate across the board, broad-based selling and indiscriminate selling. Anything that catches your attention?
Well, I believe that the price correction is a meaningful one in most of the real estate companies, particularly those who are into premium and the ultra luxury segment, where probably some of these companies are going to have relatively better business to talk about. In fact, the visibility on the revenue side is probably there for most of the companies. So partly it can be argued that it is reflected in the price. I agree with that part of it. But otherwise, I think this is an opportunity coming in for at least the companies which are having a greater visibility in the particularly luxury and ultra luxury segment, where we believe that the choice is very clear. Companies operating out there could possibly have relatively better profit numbers to talk about. So yes, I think the corrected price gives an opportunity in some of the stocks at this point of time.
Deven, I wanted your view on RBL Bank. The banking index is down 650 points. RBL Bank, we're waiting for that big deal. The deal got announced and then the stock actually went nowhere. But in today's trading session is actually outperforming. Stock is up close to around 3% or thereabouts. What's your view on a smaller bank like this? That over the longer term, it's actually disappointed. But in the last year or so, because of this deal, which finally got announced, it's actually outperformed and it's outperforming today.
Well, I think the smaller banks probably is not in our preference list for sure. Right? Because of the fact that today, the way in which the economy is moving, some of the larger book size, I think, is required for funding the loan positions of the borrowing positions of many of the larger corporates. Having said that, smaller banks will probably continue to issue the small ticket lending transactions comparatively. They will probably have a good time at the same time, but we do not see a real good merit, I think, vis-a-vis some of the larger players. So we believe that since the economy is demanding more amount of expenses, capital expenditure, probably I think some of the larger banks will participate far better and their profit performance could be far bigger compared to the smaller ones. So that's a view we carry, and we believe that the bigger banks are going to probably take the maximum advantage of this super capital expenditure cycle that the country is experiencing and will be experiencing over the next 5 years.
Okay, all right, Deven, thanks a lot for joining in and giving us your view on all of those stocks. Have a good remainder of the day. By the way, keep an eye out on the index. We've just breached the 20 DMA as we speak. Sharp downtick is what we are seeing on the Nifty. The Nifty Bank is down close to around 700 points or thereabouts. And stocks that could potentially be in trouble if there's a geopolitical escalation. You have Interglobe Aviation that was down 2% a few minutes back. That's down close to around 3%. Bajaj Finserv is another stock that's taken a bit of a leg down. And some of these auto names that actually did well, they've come in for profit taking. A couple of them, just to name out, Eicher Motors, as well as Bajaj Auto. Both of them have moved lower. Tell you what, slip into a short break. On the other side, Shibani Sirkar-Kurian, the head of equity research and fund manager for Kotak Mahindra AMC, will be joining in.
Welcome back. Another wave of selling pressure and the Nifty is back to levels of 25,500. A quick 50 points swiftly lost in the last 10 minutes. And it's auto names. You spoke about Interglobe Aviation before that, which has now extended the fall to 4%. But Eicher Motors, Maruti, Bajaj Auto and HDFC Bank is a heavyweight, which is down 1%. Anything in the F&O-Qs which suggests this weakness?
Well, Rima, I think this is still routine profit taking, and the fear is that we're going to see the geopolitical issue really creep up big time. So that's the big fear out there, and it's indicated in the VIX spiking up. The volatility index has spiked up today. It's up close to around 10%, though it's far away from that 17-18% odd, which is normally the zone where you get a little bit fearful. The Nifty PCR ratio, it was at around 1.2 at the start of today. It's come down to around 0.78 because the call writers, they believe the game is on. The Nifty is not going to get past that 26,000 odd mark. So the 25,800 call, aggressive writing out there. Premium yesterday 150. Today the premium has come down to around 45 rupees. 25,700 call. Premium yesterday was around 212 rupees. That's come down to around 67 rupees. So aggressive writing is what you're seeing on both those two strikes. Now the 20-day MA. The Nifty is hovering around that mark. Actually, we swiftly went down a good 50 points in the last 10 minutes, and we've recovered actually some part of those losses. So the day's low is around 25,480. We managed to protect that, but you don't want the zone of the 20 and the 200 DMA to actually get breached. So just keep an eye out on that front. After a while, we're seeing the Nifty Bank that's underperforming, and Kotak Mahindra Bank is seeing a good amount of short addition. As is the case with HDFC Bank as well. There are fresh shorts that we're seeing on that one. While RBL Bank, well, that's the one that's come in for a bit of a short covering bounce in today's trading session. So the panic low of today actually has got defended. But we'll have some kind of volatility that will still in store because the final 30 minutes we'll be having the sensex weekly expiry that'll play out. So just keep an eye out on that front. That said, let's welcome Shubhani Kurian, the head of equity research, as well as fund manager at Kotak Mahindra AMC, who joins us. Hi, Shubhani. Hope you're feeling good this afternoon. Market's not feeling too good. What's your take with regard to the entire market setup? Political issues aside, because you don't know what's going to happen on that front. But otherwise, for India, we've got a trade deal going. Fine print is awaited, though, but at least we managed to break through on that front. Earnings have started looking up, and hopefully the peak of currency weakness is behind. That said, are you feeling good about the market?
Hi, Nigel. Good afternoon. So yes, of course, near-term geopolitical risks and volatility remains for the market. But as you rightly mentioned, there are three key factors that we are clearly watching out for Indian markets. First and foremost, the most important is earnings. And as we have just completed or close to completion of the Q3 earnings season, the earnings for this quarter have panned out to be slightly better than expectation, especially for the broader markets. So while the Nifty 50 number looks at about 7-8% earnings growth, but if you look at the broader market and NSE 500, we are seeing double-digit earnings growth for the quarter. The other good part is that the sectoral breadth has also been fairly good. That's number one. The second is, as you rightly mentioned, from a policy perspective, both fiscal, monetary, and now with the conclusion of the trade deals, especially with US and Europe, there seems to be a lot more certainty on the policy front, and therefore the external sector appears to be better placed. The third factor for us, importantly, is valuations. So if you look at from an absolute perspective, the Nifty now is trading in line with its long-term average multiples. On a relative basis to the EM as well as to the developed markets, our premium are also back to long-term average levels. So valuations are looking far more reasonable. Our view is that for this year, markets will typically track earnings growth. And therefore, earnings looking up is good news for the market. And that's something that we will watch out for in terms of delivery going forward.
So what have you all bought right now, Shubhani? I mean, were there some interesting trends that you spotted from Q3 where you are sensing a turnaround, a significant acceleration in earnings, and these which should be actionable, not something which is already in the price?
Yeah, so absolutely, Rima. A couple of things that were clearly visible from this quarter in terms of earnings. One, as I mentioned earlier, when you look at the headline Nifty number, it looks fairly subdued. But if you look at Nifty Next 50, for example, the earnings growth was much higher, and therefore large caps actually as a basket have delivered double-digit earnings growth. Secondly, when you look at the broader market, which is the NSE 500 universe, PAT growth was robust, again at about 10-11%, which is slightly higher than nominal GDP growth. And the top line growth has also been fairly good. Now, the other factor to note is that in terms of earnings downgrades and upgrades, it does appear that the downgrade cycle is bottoming out. And therefore, FY27 earnings estimates are largely intact at mid-teens. In terms of sectors, if you look at FY27, again, the sectoral distribution is fairly broad-based. One large sector which shows improvement in terms of earnings is banking, where we expect improvement in earnings going into FY27. Discretionary consumption, auto, parts of industrials, healthcare, and even some of the cyclicals, these seem to be pointing out to better earnings trajectory in FY27. So from a sectoral perspective, our view is that sectors such as BFSI, consumer, discretionary, and healthcare continue to be well placed in the current market condition.
What about tech? Which side of the argument are you on? Maybe Indian tech doesn't need to compete. Maybe they can do a collab. And, at these valuations, some believe it's fairly attractive, while others believe no growth, no looking at them. Which side of the argument are you on?
So if I may say, Nigel, I'm somewhere in the middle.
Not fair.
Because, let me just articulate what we are thinking. Of course, the AI transformation story is here to stay, but markets tend to be extreme in terms of views. And today, the extreme view is that AI kills software services. That we believe is an extreme. Software services is likely to continue, maybe in a different form. And therefore, we'll have to see which companies are agile enough to be able to adapt to this new world order. Now, of course, there have been a lot of commentary on that. And our belief is that overall enterprise adoption of AI is a fairly complex work, which does require software services. So the scope of work is going to change, but it's not going to go away. There is going to be a deflationary trend. And what we need to watch out for is whether the volume of work is able to offset that kind of a deflationary environment. In this sort of a, overall evolving sort of a situation, valuations clearly have corrected. Valuations are looking reasonable as far as the pack goes. But I think there is going to be differentiation. It's not going to be a homogeneous sort of a sector that tech has typically been. Companies that are able to evolve and able to possibly train their staff better in terms of AI solutions, as well as bring about productivity benefits at their own end, will clearly be winners.
Shivani, the other big announcement came in from Mukesh Ambani. And he said just the way that Jio connected India to the internet, and there was a sharp drop in the cost of data. Similarly, Jio Intelligence will now connect India to intelligence. And he spoke about dramatically reducing the cost of intelligence. And we know what happened way back in 2016 and 2017. After Jio came in, the price of data dropped by more than 95%, and it gave birth to so many industries. All the consumer apps that we know today in India are thriving because of cheap data. So now if cost of intelligence becomes as cheap and they apply that same playbook that they've done for data, they apply it to intelligence, what are the second, third order implications? How should one think about the economic impact of this from a stock market point of view?
You're right. As I was mentioning that obviously when you have such democratization of artificial intelligence, there is likely to be productivity benefits which every company will require and will ask for. And therefore, there is a deflationary environment in which, maybe IT services will have to compete. However, remember that the scope of work continues to grow. Today, if you look at enterprise adoption of AI is in fairly nascent stages. All of us as consumers use AI in some form or the other. However, enterprise adoption of AI requires significant amount of business transformation, for which you do need software services. So the entire way this entire situation is going to evolve going forward is something that is possibly not known today and will continue to come forth over the next maybe year or 2 years or so. So I think what I'm trying to say is that things will evolve and companies will have to continuously adopt and change themselves. So those companies which are clearly agile will win. And there will be a differentiation between companies across the board in terms of their ability to, one, be cost competitive, as you were rightly pointing out, and secondly, also offer solutions to their customer base, which are differentiated in nature.
Got it, Shivani. Thanks a lot for joining in, giving us your take on the various industries that we discuss, and looking forward to chatting up with you soon. Hopefully, the markets get past this geopolitical scare that's weighing on sentiment. Well, before we slip into a short break, keep an eye out on a couple of stocks in the broader markets. Datamatics, I don't know what's gone on there, but that stock suddenly has spiked up to the high point of the day. So I think we should get that one up for you on the screen. La Opala Glass, that's the other one that suddenly moved up as well. So a few winners from the broader markets, but otherwise the headline index tried to make a bit of a pullback, but we're back below the 25,500 or thereabouts. Slip into a break, come back. We'll tell you what's going on in dealing rooms. We'll also get you some technical trading ideas. Don't go anywhere. Welcome back. Markets at the low point of the day. The sensex weekly expiry is definitely playing a role out there. But what about dealing rooms? Let's go across to Nimesh and D Street Chatter and find out what is he picking up. Nimesh?
Hi, Nigel. Yesterday's good-looking screen is looking very ugly in today. So clearly, it's come as a bit of a surprise, Nigel, because if you look at Asia, India has been the big underperformer compared to the Asian markets. Even compared to the commodities, India has relatively underperformed. So really no specific reason as to why we are down 350 points on the Nifty. The broader markets are also down in today's market. The large drag has come from the IT names, which continues to be under pressure. And of course, because of IT, you've seen a bit of profit booking or a bit of selling in the real estate names as well. From a flow perspective, though, I have not heard very large selling from the FIs. Remember, they have turned net positive in the last many days. But again, today it looks like it's kind of a mixed day as far as flows are concerned. So no big sell-off is by sense. Technically, 25,850 is acting as a big resistance on the upside. So that's a little to watch. But now, after today's fall, the PCR has again fallen close to 0.6, 0.7 level. So normally below 0.65, you see a bit of a bounce back as well in the Nifty. OMCs are under pressure because of rising crude. But again, as I said, today's move has come as a bit of a surprise. And India has been the only market which has relatively underperformed all of Asian markets as well as commodities.
That's true, but many of the Asian markets are also reopening for trade today, like the Korean markets, which is where you saw a big outsized 2.5% gain because they were shut over the last couple of days. Taiwanese markets, Chinese markets, Hong Kong continue to remain shut. What about stocks, Nimesh? What's got your attention?
Well, first, the couple of stocks where I'm expecting large block deals very soon. The first is CE Infosystem, which is MapMyIndia, as well as in Paytm. Paytm is down 4%. It actually stock rallied 6-7% in the last couple of days, and today it's down 4% because there is a fear that there could be a large block from the strategic investor in Paytm very soon. So that's the reason why. And in CE Infosystem, the feedback is that maybe the domestic mutual fund might sell 1% stake in CE Infosystem very soon. So that's the reason why even that stock is under pressure today. The second name is Tube Investment. We've seen a big fall in that name in the last couple of weeks. Now a bit of buying has emerged. For the last couple of days, I understand some domestic mutual funds are actively buying into Tube Investments at lower levels. The third name is Bharat Forge. We've seen a good outperformance in Bharat Forge ever since the US-India deal was done. Now at these levels, I understand at least one big large sovereign fund is an active buyer. So there is a bit of buying support at lower levels in Bharat Forge from this particular sovereign fund. And the last is a couple of names where there is delivery-based selling today. DLF as well as Tata Motors commercial vehicle, which is Tata Motors CV. Both will see high delivery volumes, but on the sell side because there are sell flows from larger FIs in both this name, DLF as well as in Tata Motors CV.
Thank you very much. As always, we look forward to that list. Thank you, Nimesh. Let's get you the mega CNBC TV18 exclusive, which is coming straight from the all-important India AI Summit. Shireen was in conversation with none other than Sam Altman, the top boss at OpenAI. Here are some excerpts from that exclusive conversation about India's AI push, the deal with NVIDIA, and a potential listing of OpenAI. Listen in.
This is the fastest growing market for codecs. And it's amazing to see the energy here. Every time I come, it feels like it's gone up another level.
You know, Sam, you also shared the stage with Pratyush Kumar of Sarvam. The last time you were here, there were questions being asked on whether India can do an LLM. Have you had a look at what Sarvam has been able to put out?
India's, yes, but more generally, India is just building incredible AI, the entire AI stack, from like data centers to models to applications, and I think there's no country in the world quite matches India for total AI energy. The number one request we get is better support of local languages and dialects, which is something we're hard at work on, and we're open to taking any other requests if you have some.
You also talked about AI and the need for regulation, or at least a watchdog, akin to the nuclear watchdog. You talked about the IAEA. That's an interesting comparison, an interesting analogy that you made.
Well, I think all historical analogies are imperfect because every technology is new, every moment is new. But the thing that I like about the nuclear analogy is it was something that the world really did come together on, even countries that normally don't like each other very much, and figured out how we could address the serious concerns of misuse of the technology, but also figuring out how to share the benefits and get nuclear energy out into the world. So IAEA has been imperfect. Nuclear technology is an imperfect analogy for AI, but it was a moment of real global cooperation.
Well, you're expecting countries to cooperate, but companies are unwilling to cooperate at this point in time. It's a war out there in the valley, isn't it?
In some ways, yes, but around AI safety and AI alignment, I find the companies to be pretty collaborative. Same way for countries. I think countries will economically compete, but when it comes to safety and stability, I expect they'll collaborate.
What's the latest as far as the deal with NVIDIA is concerned?
We are building compute as fast as we can. Yes, we'll have more compute over time, for sure.
OpenClaw and the pivot towards more agentic future for you specifically. Are we likely to, A, how do you use that? B, are we likely to see more acqui-hires from you?
So the models are getting good enough. We still have a lot of issues around safety and sort of security to solve with an OpenClaw-like approach, but I think OpenClaw is the most exciting thing to happen in the AI space in quite some time. And this vision of the models getting good enough that you can have a local agent running for you on your computer or a different computer and do all of these amazing things is really quite remarkable.
IPO in 2026? The visibility for that?
Presumably, OpenAI will be a public company someday. In terms of timing, there's like a lot of factors at play, and obviously this is a super dynamic world.
GPT-6?
Presumably that will happen at some point too. I don't have a date to share with you yet.
In the first half of the year?
I don't know when we're going to call something GPT-6, but the model improvement trajectory remains extremely steep. If you look at the progress from 5 to 5.1 to 5.2 to 5.3 in Codex, what I would say is, names aside, you can expect a trajectory like that to continue. I don't know what the exact percentage is, but there's some AI washing where people are blaming AI for layoffs they would otherwise do, and then there's some real displacement by AI of different kinds of jobs. I expect we'll see more of the latter over time. Of course, we'll find new kinds of jobs, as we do with every tech revolution, but I would expect the real impact of AI doing jobs in the next few years to begin to be palpable.
All right, well, the markets are struggling as we speak, so let's find out what do you do from here. Mitesh, now we are trading below the 25,500 odd mark. Where do we get the next support level for the Nifty? I mean, we are below the 20 DMA. The 200 DMA now is in sight. Your take on that and your fresh 2 picks as well.
Yeah. So I think, one, the market breaking down means that, as I think we go back to the range of 25,400, 350 on the downside. We are actually heading towards that. And if we break that, then we look at further decline. For the time being, that's the level which I have in mind. And on the stock side, STBT on ICICI Bank with a stop at about 1396 for targets of roughly around 1370. And Indigo also, that's a negative setup. So sell STBT with a stop at 4850 for targets of 4760.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, Reliance Industries Chairman Mukesh Ambani also addressed the summit earlier today and made multiple notable announcements, including an investment of 10 lakh crore rupees into AI and AI-related infrastructure over the next 7 years. He also stated that India could not afford to rent intelligence and that Jio would help cut costs for AI in India. Let's listen in to his comments.
Jio, together with Reliance, will invest 10 lakh crores over the next 7 years, starting this year. This is not speculative investment. It is not for chasing valuation. This is patient, disciplined, nation-building capital designed to create durable economic value and strategic resilience for decades to come. Distinguished participants, the biggest constraint in AI today is not talent or imagination. It is scarcity and high cost of compute.
This is actually quite, could be potentially very, very disruptive because Jio bringing down the cost of data is one of the most disruptive things that we've seen in the history of telecom. And there were ramifications for all the industries. It led to the birth of the consumer app economy, Zomato, Swiggy. They're all thriving on the fact that the cost of data is now so cheap. And now Reliance has made a bold bet, a commitment to bring down the cost of intelligence, to make it affordable, accessible to everyone. And that is Reliance's promise, Jio Intelligence's promise. Sudeep Bandyopadhyay is now joining in on this last leg of the show. Sudeep, the market is cracking fast and hard. You know, I just stepped out to go to the washroom. We were at 25,500 and now inching towards 25,400. Anything you picked up from your dealing rooms?
Well, I think there is generally nervousness regarding the geopolitical situation developing in the West Asia. Crude oil prices have already shot up, and there are fears of some, action happening over the weekend. I think that's scaring the dealers, that's scaring the investors at this stage, and they will prefer to be cautious or on the side of caution at this stage. I think that's where the entire selling and panic is stemming from. So caution is the word, I would say.
Indeed, markets are feeling the jitters now, 25,400. Just pull up the European market to see. Europe is also lower. The French index, that's CAC, is down more than 0.5%. The DAX has slipped a similar amount. The FTSE will come up for you on your screen, and that's mirroring the losses. So frontline European markets are down close to about 0.5%. And Dow Futures is currently down about 85 odd points. Not a big cut. Yesterday was a positive day for the US market. So it's the Middle East tensions, jitters, the rise in crude prices that are putting pressure on the Indian markets. And plus, it's the Sensex weekly expiry that tends to add to the volatility. Any actionable trades for today, Sudeep?
Well, we have been, recommending buy in the chemical, agrochemical, and specialty chemical space. I think that's one space where we believe there is a lot of traction. It was a completely bombed out area for last 2 years. The performance was bad, but green shoots are very clearly visible if we look at the Q3 numbers. Also, India-US trade deal, India-EU trade deal does help this sector in a significant way. Anywhere between 25 to 50% of their output goes to Western European and US. So this is going to be a good time for these companies. Also, remember, the stocks have been beaten down. The valuation are still not, still reasonable, I would say. So one can still look at a company like an UPL, which is the fifth amongst the top 5 agrochemical companies in the world. One can look at RT Industries, which I think is doing pretty well, and expansion plan also is getting completed. And many other companies in this sector are definitely worth buying from a one-year perspective.
So agrochemical names is something that you like. We'll come back and continue the conversation, Sudeep. For now, we need to slip into a short break. On the other side will also be the market closing, and it looks like it's going to be a very tough closing. The Nifty hovering around 25,400. Well, looks like 25,400 is going to go. We've got 5 minutes to go, and markets are bleeding now. It's a 1,500-point knock on the Sensex. The Nifty fall has extended to more than 400 points. And now I think week to date, having given up all the gains that we had in the prior 3 trading sessions, because Monday to Wednesday markets were positive, and yes, week to date, today we've lost more than the gains accrued over Monday to Wednesday, which is why week to date now we're down 0.25%. Mid-cap index is down 0.6% now week to date. Disappointing. One segment of the market holding up is some of these software related stocks. So Nugent Software 15% up, Datamatics 12% up, NetWeb sees buying for the second day in a row. Do you want to comment on these, Sudeep? Any on your radar, any that you track, any that you recommend?
Well, I think, I've been advising people to stay away. I think it's a too volatile a situation. Some of these, obviously, NetWeb, because of the tie-ups they have with some of the AI entities, there is some excitement coming to the counters. But it's too early to predict who will be the winner, and things are too volatile. And the pace of innovation is significant. Under these circumstances, I've been recommending investors to stay away from this entire technology pack at this stage. Better time will come for taking, making your choice clear and buying into these stocks. At this stage, let's wait and watch from the sidelines. Let's focus on sectors which are not directly or indirectly getting significantly impacted by AI. Those are the picks, those are the sectors which I think I will find a safer bet at this stage.
Okay, all right. Sudeep, I wanted your view on NCC. They were barred by the NHAI, and the stock started off 7-8% lower. But NCC is now at the high point of the day, telling you that as is NHAI, didn't have much of contribution to their order book. And it appeared that the dispute actually was a very much backdated, dispute. And that's why just take a look at the stock in the market. At the day's low, the stock is up. Your view on this name, I think at its peak, the stock was more than 300 rupees.
Yeah, absolutely. I think the correction, even then I was under the impression that the correction was not warranted really. NHAI doesn't contribute significantly to their order book. Of course, there is potential of NHAI becoming prominent at some stage, but at this stage, it was not that relevant for the stock to get beaten down like that. And at current level, I think there is potential for the stock to go up from here on. I think the overall segment in which NCC operates, there is a lot of excitement, there are a lot of contracts flowing, and the company has definitely the potential to do even better from current levels in terms of performance, which should again reflect in the share prices going forward.
Look at NCC spiking in late trade. That's now up nearly 1%. The news was negative, but markets have shrugged it off for now. ONGC, Oil India, MRPL are some of the resilient stocks today, benefiting from the rise in crude prices. Sudeep, do you want to comment on these?
Well, it's obvious, when the crude prices go up, these companies which are crude producers, they benefit. And but I must warn the investors that this is an extremely volatile space. So if they are venturing into this, they should be very careful, because we know why the crude is spiking. There is a threat of war in West Asia. And if that war comes, maybe it will spike even further. But these are all very speculative trades, and you are taking a huge amount of risk if you are getting into it. Fundamentally, if you ask me, I think today is not the day to buy any of these stocks.
Got it, Sudeep. Thanks a lot for joining in and giving us that view. We'll touch base with you in just a bit. Well, let's wind down the markets then. It was definitely a weak trading session. And a few factors that played out today was the sensex weekly expiry, geopolitical tensions, Brent crude prices that did spike up, and more or less, lack of participation from the domestic, players, because the banks were shut as well. What didn't do well? Interglobe Aviation was down, BEL was lower, as well as Ultratech Cement. They were the top losers on the Nifty itself. What did well in trade today? ONGC. That's the oil producer that did well. And giving it company on the upside from a non-Nifty stock was Oil India. Both of them did do pretty well in today's trading session. Saman Capital as well as RBL Bank, both of them, have announced deals in the last year or so. Now the street believes those deals will get completed. So the stocks, in fact, were higher in today's trading session. On the flip side, HPCL, well, they have an inverse relation with the rise in crude oil prices. So you had HPCL, BPCL, as well as IOC, all of them were lower. Some of the EMS companies as well, like Keynes Technology, gave back close to around 5%. And real estate names, Lodha as well as, DLF, both of them were lower in today's trading session. Rima, what else?
Well, Physics Wala catches your attention. The stock has been having a one-way fall and now in double digits, 99. Issue price on Physics Wala was, I think, 109. The 52-week high was about 161. So the stock has corrected more than 50%. PSU banks came under pressure. They've had a good run, but names like UCO Bank were subdued in trade that lost about 2%. And on the way up, as we were highlighting, it's some of these software companies. NetWeb, Datamatics, Nugent Software saw buying, and silver ETFs, Grow Silver ETF, Starter Silver ETF, Nippon India, big up moves seen in these stocks in pretty large volumes. Well, that brings us to a close in this edition of Closing Bell. Thank you very much for watching, but don't go anywhere. On the other side, the conversation with Sudeep Bandopadhyay will continue on Markets Forward. Stay tuned.